Welcome to Fomo Consulting for your Xela stock analysis video on Monday, August 16th. Ladies and gentlemen, are we about to have a trend reversal? We'll look into it. And as always, the apes are winning, the diamond hands are winning, most importantly, the retail investors winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It's a newer channel, and I'd appreciate the support. Let's get into the video. So let's look at the broader market overall. The S&P and the Dow both closed up record highs. Dow was up 110, S&P up 11. Nasdaq tried its best to get back to the green, down 29, and Russell was down 19. Overall, the futures last night, the futures this morning, pre-market, heavy selling pressure. Opening bell was no different. Everything sold off. Everything was blood red. And quite frankly, Xela was one of the few stocks that was actually green in my personal watch list and portfolio. Overall, Tesla took it on the chin. A lot of the EV stocks, Chinese plays, Nvidia, AMD all took pretty hard hits today. So overall, the fact that the Nasdaq actually recovered up to close down 29 points, it was down nearly 200 earlier this morning. It was a pretty strong day overall. A lot of earnings, specifically some in tech and fintech, as well as many are in retail this week. So it'll be interesting to see how the economy is recovering on the retail side. So pay very close attention to this if you're involved. So let's look at crypto. Overall, crypto having, let's just call it a profit-taking day, had a fantastic weekend. Bitcoin was up over 48,000. Doge was up, I think, around 38, 40 cents, something like that. Ethereum, Litecoin, they were all up big. Stellar's up almost to 40 cent, if not at 40 cent. So overall, if you're involved in these plays, certainly congratulations. Overall, fantastic day. But everything was pretty much down today, kind of a profit-taking day, 3 to 5%, give or take. So well done to the German apes. You did quite well under the circumstances, down 5% to 0.26 euros. Certainly could have been worse, but you certainly had a lot of heavy selling pressure across the pond, but well done nonetheless. So overall, not a lot of news regarding Xela, except for obviously things that our opponent can use against us. Insider selling going on. No doubt they'll take this and run with it. A lot of FUD hit pieces and what have you around insider selling off. Not the biggest thing in the world. These people are human beings. They have families. They have compensation plans. They have lives to live as well. So take it with a big grain of salt, in my opinion. So let's check out the options. Overall, you've got nearly 40,000 in open interest on the call side, between $4 and $5 on the strike, and 250. You've got 7,200 or so on the put side. So obviously, overwhelmingly bullish. Again, my personal thesis is I just can't fathom this much open interest, not at least being fought for, at least later in the week, possibly Wednesday, Thursday. Again, we'll see how this plays out, but again, overwhelmingly bullish, as you can see. But the longer this trades sideways, slightly downhill or slightly uphill, theta decay is really going to have a real effect on these options contracts. So again, I would personally expect some sort of hard move Tuesday, Wednesday upwards to try to put some of these in the money, at least to try to set off some sort of gamma effect regarding the delta hedging. So we'll see how this plays out again, but certainly very, very bullish. So let's look at how Xela did today. Overall, closed at $2.60, down 6 whole cents to 2.25%. Up a little bit after hours, at least at the time of this recording. But, certainly Xela felt the heavy effects of the NASDAQ and the broader market this morning. Opening bell, pretty hard sell-off, got down to an intraday low of $2.57. Made a nice little recovery up to around 274, 275. And then volume basically fell off to nothing, and the algos took over. And as you can see, it was very mechanical, stair-stepping down. About every 30 minutes, it would find a new low and an algo trade. So Overall, you can certainly see how we performed to the broader market of the Nasdaq, nearly identical. Heavy fall off, found the bottom, a nice recovery, and then pretty well consolidated through the last third of the trading day. So again, we were just kind of corks in the stream today overall, but not the worst day we could have had. And this stock is very hard to borrow, a maintenance requirement of 200% with an estimated borrow fee of 11.5% according to Webull. So again, this is becoming increasingly risky to short. We'll see how this plays out. 5-day, 5-minute chart. Without a doubt, we have been on a downhill slide. It's just been algorithmic trading, low volume trading, obviously shorting, but I believe this will come to an end very, very shortly, and I'll show you why. So if you look over the last, let's just call it a couple of weeks, we obviously had a walk down from our more recent high of $3.54. Then we had the nice little run up, likely covering. Then they did it again, walk down, cover, and then we're in that walk down period currently. Again, we're near that support level of 260. We certainly need to hold this. The next level of support's around that 250 range, but I'm not real sure how strong it is. So again, we've been there, done that in this range before. If you look back in time into late July, we've certainly trended around that 260 area without a doubt, and then obviously we have bounced and gone up. So we'll see how this plays out over the next 24 to 48 hours. And again, that 250 line is very, very important. And as you can see, at least on the 1 hour chart, the RSI is completely blown out on the oversold side. And the MACD is certainly in oversold territory again. I believe we are poised very, very strongly for a bounce. Hopefully that will be tomorrow, but we'll see. So looking at the 4 hour chart, we certainly have been on an uptrend, as you can see. But more recently, over the last couple of days, we have broke that trend downwards. A lot of heavy selling pressure, obviously, on the RSI and MACD. As you can see, we are certainly in bounce territory. Hopefully, we can do that again tomorrow. We'll see, but we need to hold that 260 level of support. We've been there, done that in that range. If not 250 is certainly in play. Looking at the daily chart, alligator is certainly just kind of chilling, not really directional at this point. Again, RSI is below neutral, and the MACD unfortunately did not have a bullish crossover. We are actually heading in bullish direction due to the more recent price action over the last 3 trading days. So GME as a play had exceptionally low volume as well, very similar to Xela. Just kind of consolidating, not a whole lot of action overall, but certainly felt the heavy sell-off pressure at the beginning at the opening bell, like most other stocks recovered and then kind of consolidated throughout the trading day. But again, GME is another one of those squeeze stocks that can go off at any time. Again, it just needs a catalyst, no different than AMC and Xela and many, many others. Robinhood had a pretty rough day overall. Again, like many stocks, felt the heavy selling pressure, opening bell, found some consolidation, tried to recover, and then overall sold off the last quarter of the trading day. As you can see, it does have earnings after market Wednesday. We'll see if it can get a run going. Again, very divisive stock for the obvious reasons. And NAOV rocketed like a rocket ship today. Overall, went up about 50% at its height. If you were involved in this play, congratulations. Certainly a nice little play overall. I certainly believe this would mirror at minimum what Xela could do, similar price points, but overall Xela probably could go a bit higher, especially due to the options. So looking at the overall short interest, we're at 9.13 days. So looking back in time, that would put us about August 3rd from a trading day perspective. And I'll show you that shortly. But overall, the short interest, nothing fundamentally has changed, but the utilization continues to go up as a trend, which is very, very important in the squeeze formula. So looking at the short interest, on the yellow arrow on the left would basically be the general area of which the current shorts entered their position as an average. typically at obviously at its height at around that $3.54 area, and then it's been walked down very, very systematically over the last week or two. And you can currently see where we are. Is this going to be the point of release of covering? We'll see. But again, I personally believe that 250 is where they're trying to get this, obviously for the put options and as well as maximum profitability for the short positions. But currently, this is pretty much the range of which we are trading from the short positions as an average to the current price action. So looking at the short interest, as you can see, shares on loan 12 million, cost to borrow about 7%, utilization keeps trending upwards. Very, very crucial. When AMC squeezed, it was around the 95 to 100% range. We are currently almost to 90%. Institutional owners has changed substantially. There has been quite a bit of selling pressure. A week ago, we had 10 long only institutional investors. We currently have 5. So 5 have sold out of the position, at least based on 13F filings. We'll see how this goes over the coming days. Volume again was exceptionally low at 13 million, possibly due to, and it has been of recent, possibly due to the lack of institutional investors, algo trading, and what have you. Short shares available according to Fintel, 1.4 million at a fee of 7.24. Short interest went down substantially by over 15%, mostly due to the return shares versus the borrowed shares. As you can see, return shares were 2.1 million T2 settlement, and the borrowed shares 307,000 for a current short interest percent of free float 13.77. Again, this fluctuates pretty wildly due to obviously the free float size and what have you, and return shares. But again, the T2 settlement would be the 2 million would have been basically returned on Thursday, likely after the Wednesday run up. So we'll see how this plays out over the coming days. But really, nothing fundamentally has changed. But the utilization continues to go up, which is a very, very key factor. Looking at the overall options data again, 7,300 total volume, which was about half of where we've been of recent. Still very, very bullish, 3.7 to 1. Not a lot of huge contracts, but certainly the contracts that were traded today were very, very bullish, as you can see. Lots of calls, August 20th, and then a few going further out into September. So again, volume about half in the options chain as it was over the last week or so. So I want to thank you all for watching. If you found this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It's a newer channel and I'd appreciate the support. But as always, hope your life is full of green candles. Take care. Bye.